Hey there, Singaporean investors. Tired of sifting through endless news, trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's Daily SGX Market Digest for Thursday, July 17th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and Iggy's unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 24 Influential Tigers by Tiger Brokers. We've crossed the 1 million mark for reads, and with over 900 videos and 500,000 watch hours, content is literally all I do. I also focus on regional and global economic trends, giving you that broader context. So, let's dive into today's most important SGX movements. You don't want to miss what's impacting your portfolio right now. Today's SGX market showed mixed signals with several key corporate announcements shaping individual stock movements. While some counters gained ground on strategic developments, others faced challenging headwinds as companies navigate restructuring and market pressures. The Straits Times Index has been trading within a narrow range this week, reflecting cautious sentiment as investors digest corporate earnings and regional economic data. Let's start with ST Engineering, trading under ticker STE, a heavyweight in Singapore's engineering and technology space. The big news here is their decision to divest their joint venture SPTel to AQX for 290 million Singapore dollars. This isn't just any buyer. AQX is backed by fund manager Saraya Partners, showing institutional confidence in the telecommunications infrastructure sector. The stock closed Wednesday just 0.1% higher at 8.34 Singapore dollars, which might seem modest, but think about the bigger picture. This divestment, expected to close in the fourth quarter of 2025, represents ST Engineering's strategic focus on their core segments. The company has been systematically streamlining its portfolio, focusing on higher margin aerospace, defense, and smart city solutions. Their current market capitalization stands at approximately 26 billion Singapore dollars, making them one of the largest engineering conglomerates in Southeast Asia. The price-to-earnings ratio of around 15 times suggests the market may be undervaluing their strategic repositioning. Are investors perhaps missing the capital allocation strategy here? Next up is Frasers Logistics Commercial Trust, trading under BUOU, operating in the real estate investment trust sector. The trust is making a strategic move by divesting its Melbourne CBD office building at 357 Collins Street for 192.1 million Australian dollars, equivalent to 161.4 million Singapore dollars. This represents a 0.6% premium over independent valuation, which is impressive in today's challenging office market. The shares gained 0.59% to close at 86 Singapore cents on Wednesday. What's really interesting is the strategic shift here. FLCT wants to exit the Melbourne office market entirely and focus on logistics and industrial properties. Given the ongoing challenges in CBD office markets post-pandemic, this looks like smart portfolio management. The trust currently trades at a discount to its net asset value, with a distribution yield of approximately 6.2%. Their focus on industrial and logistics assets positions them well for e-commerce growth trends, especially as supply chain resilience becomes increasingly important. Now let's talk about MM2 Asia, trading under 1B0, the struggling entertainment firm making headlines for all the wrong reasons. The company is seeking to delay a 54 million Singapore dollar bond repayment by 6 years until December 2031. They're also raising the interest rate from 5% to 6% per annum. That's the price of financial distress. Despite these challenges, the counter surged 16.67% to close at 0.07 Singapore dollars. But here's the reality check. Their cinema chain, Cathay Cineplexes, just received additional repayment demands worth 3.3 million Singapore dollars from landlords at Century Square and Causeway Point. The entertainment industry has been hit hard by changing consumer preferences and the shift to streaming platforms. With a market capitalization of just around 25 million Singapore dollars, this is a company fighting for survival. The stock price jump might be speculative, but the fundamentals tell a different story. Moving to HRnetGroup, trading under CHZ, the recruitment services provider. The company appointed 10 new business leader co-owners on Wednesday, bringing their total to 45 co-owners. This might sound like corporate housekeeping, but it's actually quite strategic. The shares remained unchanged at Wednesday's close, but don't let that fool you. This co-ownership model gives key leaders decision-making power and aligns their interests with company performance. In a talent-driven business like recruitment, keeping top performers engaged through ownership stakes is crucial for long-term success. The company has been expanding across Asia, with operations in Singapore, Hong Kong, Malaysia, and other regional markets. Their current market cap of approximately 280 million Singapore dollars reflects their position as a regional recruitment leader. Finally, Osia International, trading under 1DDO, the lifestyle products retailer facing a privatization offer. The controlling Go family, holding 84.79% of shares, confirmed they won't increase their 16 Singapore cents per share offer. The stock closed 0.6% higher at 16.4 Singapore cents, just above the offer price. This creates an interesting dynamic. The offer represents a significant premium over previous trading levels, but minority shareholders seem to be holding out for more. With the offer originally made in May 2025, this standoff highlights the challenges of taking companies private in today's market. The retail and lifestyle sector has faced headwinds from changing consumer spending patterns and increased competition from e-commerce platforms. All right, let's pull all of today's movements together into Iggy's daily market take. What we've seen on the SGX today, particularly with the mix of strategic divestments and financial restructuring, really underscores a crucial point for us retail investors. The most crucial takeaway today, in my opinion, is the importance of distinguishing between tactical moves and financial distress. ST Engineering and Frasers Logistics are making strategic portfolio adjustments from positions of strength, while MM2 Asia is fighting for survival. This reminds us to always look beyond the headline numbers and understand the context behind corporate actions. Today's movements underscore the importance of focusing on companies with strong balance sheets and clear strategic direction. Think about how your current holdings align with these broader trends. Are you invested in companies making proactive strategic moves, or are you caught up in distressed situations hoping for a turnaround? The recruitment and privatization stories also highlight the value of strong management teams and ownership alignment. Companies with engaged leadership and clear succession planning tend to navigate market challenges better than those in constant restructuring mode. This is especially important in today's volatile market environment where adaptability and strong governance make all the difference. That's the scoop for the SGX today, Thursday, July 17th, 2025. Navigating these daily market shifts is crucial for your wealth growth right here in Singapore. If you found this digest helpful and want to get my real-time analysis, urgent insights, and a daily heads up on crucial market movements delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $1 a month, less than a cup of coffee. Think of it as your daily dose of market foresight directly from my desk. Ready to stay ahead in the Singapore market? Just click the link in the description below to become a member. Don't forget to like this video, share it with your fellow investors, and leave a comment below with your thoughts on today's market.